What if I told you they're a clinical stage biotech company trading for just 55 cents with groundbreaking technology that could revolutionize how we treat bacterial infections? Today we're diving into a penny stock most investors have completely overlooked. But here's the catch: I'm not revealing the company name right away. I want you to understand what they do and why they matter before we reveal their identity. So, stick around. Before we dive in, let me be clear. This is not financial advice. Penny stocks are extremely risky, highly volatile, and the majority fail. Always do your own research and never invest money you can't afford to lose. The company we're examining operates in a fascinating corner of biotechnology. Instead of developing traditional antibiotics or small molecule drugs, they're pioneering bacteriophage therapy. If you're not familiar with phages, they're naturally occurring viruses that specifically target and destroy harmful bacteria. Think of them as precision weapons against bacterial infections. This approach is particularly exciting because we're facing a global crisis with antibiotic-resistant bacteria. Traditional antibiotics are becoming less effective, and this company is positioned right at the intersection of that urgent medical need. What makes their technology compelling is the specificity. Traditional antibiotics are like carpet bombs. They kill good bacteria along with the bad, disrupting your microbiome and causing side effects. Phage therapy targets only the specific harmful bacteria causing disease while leaving beneficial bacteria untouched. The company has developed a proprietary platform that allows them to discover, validate, and customize phage cocktails for specific bacterial targets. They have multiple programs in clinical development right now. Their lead program targets chronic pulmonary infections in cystic fibrosis patients. Cystic fibrosis is a devastating genetic disease where patients suffer from recurring lung infections, primarily caused by Pseudomonas aeruginosa bacteria. These infections are incredibly difficult to treat and are a leading cause of death in CF patients. The company's phage cocktail specifically targets this bacteria, and they've advanced into clinical trials. Early data has shown the treatment can significantly reduce bacterial load in patients who have failed multiple antibiotic treatments. Beyond cystic fibrosis, their pipeline includes programs targeting diabetic foot infections, which affect millions and often lead to amputations. They're also exploring applications in inflammatory bowel disease and certain cancers where specific bacteria play a role in disease progression. The platform approach is brilliant because once they validate the technology in one indication, they can apply it across multiple disease areas. What caught my attention is the institutional validation. They recently secured significant equity investment from Morgan Stanley, which took a 7% stake. Major financial institutions don't typically invest in microcap biotechs unless they see real potential. The company has partnerships with leading academic institutions and has received grants from government agencies recognizing the importance of their antibiotic resistance work. The management team includes scientists and executives with deep expertise in microbiology and drug development. The CEO has experience bringing biotech products through clinical trials and regulatory processes. This isn't a team of first-timers. They understand what it takes to navigate FDA approvals and clinical development. Now, let's talk financials. The company has a market cap of approximately $13 million. They're pre-revenue and burning cash to fund clinical trials. However, they've been strategic about capital raises, timing offerings to coincide with positive clinical updates. Their burn rate suggests runway into 2026. Though they'll need additional financing before reaching commercial milestones. The float is relatively tight, with about 9 million shares outstanding after a recent reverse split, which means the stock can move quickly on news. So we have a sub-dollar biotech with breakthrough phage technology, multiple clinical programs addressing serious unmet medical needs, institutional backing from Morgan Stanley, and tight float dynamics. The company is attacking the massive problem of antibiotic resistance with a novel approach. After all this context, what company are we discussing? The company is Biomex Incorporated, ticker symbol PHGE, currently trading at approximately 55 cents. Now, let's dig deeper. Biomex's lead asset BX004 is in clinical development for Pseudomonas aeruginosa infections in cystic fibrosis patients. This program received orphan drug designation from the FDA, which provides 7 years of market exclusivity if approved, and various development incentives. The Phase 1b/2a trial showed the phage cocktail was well tolerated and reduced bacterial burden in treated patients. Their second program, BX211, targets diabetic foot osteomyelitis, a severe bone infection affecting diabetic patients. Current treatment often requires months of intravenous antibiotics and sometimes amputation. A targeted phage therapy that could cure these infections quickly would be transformative. The company completed preclinical work showing over 80% bacterial knockdown and is advancing toward an investigational new drug application. Beyond infectious disease, Biomex is exploring the role of specific bacteria in inflammatory bowel disease and colorectal cancer. Certain bacterial species drive inflammation and potentially contribute to cancer development. If phage therapy can selectively eliminate these harmful bacteria, it could open entirely new treatment paradigms. These programs are earlier stage but represent significant long-term optionality. The regulatory pathway for phage therapy is still being established. The FDA has approved individual phage treatments on a compassionate use basis, but there's no established precedent for commercial phage cocktail approval. Biomex is working closely with regulators to define the pathway, which adds both opportunity and uncertainty. But let's talk risks. They're substantial. First, clinical and regulatory risk is enormous. Phage therapy is novel, and regulators may require extensive additional data before approval. Second, financial risk is severe. With a $13 million market cap and ongoing trials, massive dilution is almost certain. Third, there's commercialization risk. Even if approved, building sales and distribution for a completely new treatment modality is challenging. Fourth, competition exists from other companies and academic institutions exploring phage therapy. Fifth, manufacturing complexity is a concern. Producing consistent phage cocktails at commercial scale is technically challenging. Sixth, the reverse split history is a red flag showing struggles to maintain NASDAQ compliance. What are potential catalysts? Clinical data readouts from their CF program would be the most obvious. Positive efficacy and safety data could significantly re-rate the stock. An IND submission for their diabetic foot program would validate pipeline progression. Partnership announcements with major pharmaceutical companies would provide both capital and validation. FDA Fast Track or Breakthrough Therapy designations would accelerate development timelines. Any acquisition interest from Big Pharma looking to enter the phage therapy space could be massive. The bottom line, Biomex represents extremely higher risk, high reward penny stock investing. At 55 cents, with a $13 million market cap, this is pure speculation. But for investors who understand the risks, can afford to lose their entire investment, and want exposure to potentially revolutionary technology addressing antibiotic resistance, it's worth researching. The company has novel science, institutional backing, orphan drug designation, and multiple clinical programs. They also face all the risks of a sub-dollar microcap biotech, with certain near-term dilution and an unproven regulatory pathway. If you found this valuable, like and subscribe. Comment what other penny stocks you want analyzed. Remember, always do your own research, never invest more than you can lose, and understand penny stocks can go to zero. This is for educational purposes only. Stay smart, stay disciplined, and I'll see you in the next video.